Good evening, everyone. This is Matador from freetradingvideos.com. It is Thursday, January 17th, 2008, and we had a pretty interesting down day today. Over 306 Dow points. NASDAQ was down 47. S&P down 39 points. Almost 2.5%, almost 3% on some of those. Just awfully brutal. If you're on the wrong side of that, that doesn't feel good. If you're short, that feels pretty nice. Again, that's why it's nice to be hedged. Try to be 50% long, 50% short. Some of your long trades are going to hold up even in the face of this. A lot of them are going to get stopped out. A lot of stocks on the short side are going to do very nicely. Some of the shorts I'm in aren't going to even perform well in this kind of market, and those are going to be the ones I'm probably going to get out of when the market rallies, if it does here. And again, it's a nice pruning mechanism for my trades. Doesn't mean I'm going to make as much money if I had gotten the direction right and been all short here, or vice versa, but it does let me sleep a little bit better at night. So after about 10:30, the Philadelphia Fed announced pretty much took a nosedive, right? So regional manufacturing survey came in at about 20.9. That was the lowest since October 2001. They had been predicting 1.5, and that number is below zero. It sort of reflects a contradiction in manufacturing, that region there. So definitely weighed on the broader market, especially the materials sector, which was down over 5% today. Incredible. Pretty much caused concerns about growth. So the treasury market rallied, sort of people threw their money into safe havens, and kind of nice. The financial sector also was down 4.7% or so, and that played a nice role in today's weakness as well. Merrill Lynch also reported a huge loss today, loss of $13.3 billion for the fourth quarter. Bad. A lot of that was, again, due to subprime and CDO exposure. So if I hear the word subprime one more time, I'm going to throw my computer out the window. But whatever, being on the long side and the short side, it's nice to be hedged, like I said. So let's tear apart these broad markets together. Here's a picture of the S&P 500. So we had drawn in a lot of support and resistance in here. Here's a nice higher swing low. Kind of worked sideways out of that. Broke that, ran right to the next logical place of support, which I'll show you in a minute. It's actually not even on this 3-month daily chart here in Thinkorswim. Bounced there for a while, and then we have crashed out of that, and I'll show you why in just 1 second. At least technically, we just talked a little bit about why fundamentally. So the markets had held up beautifully over here. So I just threw up a 6-month daily chart of the S&P. I can even go back in time, go 9 months. Still need more data, so I go up to a year, and there's our support. So beautiful run up as the stock runs from point A over here all the way up to point B. Hurts a lot of people on the short side. They're going to do anything they can to get their money back. They buy to cover. That holds the market up. Holds it up again, and that's what we just crashed through today finally. All that support got taken out. Ran to the next logical place of support, which I had drawn in on the chart. Had to put 2 years of data up here. And then we can sort of zoom in, and you'll see just that little blip in here. There's another little blip here that caused support right through here. I could extend that line out. You'd see that as well. There's support in here as well. Got taken out. So anyway, this is a very, very good place to look for the next logical place of support, and that's what we got today. Not much below that to help it out. So even if you put 5 years of data up here, just zoom in on this bit of it. Now we're looking at a 5-year weekly chart. You can also see here that support, the next stop, is way down here around the 200 MA on the weekly chart. We also just crashed through the 100 MA right here on the weekly chart. So that's what it had been holding up on so nicely, as well as this price support back here. So pretty interesting day so far. Makes the week a little bit bloody as well. One more day here to catch a rally. If we do at all, that'd be amazing, because if you look at today's bar, so we'll go back to a 3-month daily. If you look at today's bar, it closed within the bottom third. Even the people who were short today, very few of them bought to cover if they were day trading it. And that would have caused a nice rally toward the end of the day. That's why it's so powerful to see a stock close on its low, or if a stock closes on its high, then not a lot of day traders are leaving or selling out. That can be a powerful indication that we might get some movement continuation. In this case, the continuation might be down. So nothing to sneeze at. And if I take the S&P apart, we can do the same thing with the NASDAQ. You'll see a very similar picture, although not quite as bloody. You can even go back in time and see those similar shapes. And here's the Dow. This is just the ETFs for the Dow. I'll give it a chance to. There he is. Almost looks exactly the same. So that's nice. They're highly correlated markets. Here's a 2-year. You can see I've been doing some analysis on that. A lot of Fibonacci retracements. 2-year daily. I'll go ahead and get rid of this. We don't need to have that in there. There we go. And I'm still looking for why this is short. I have to go even further back. So I go, and I'll just bring all this up. This is how I analyze the broad markets at night. And now this guy is finally coming down into this area here. Nice swing low here, good swing low, very nice little double bottom down here. And so this stock just barely stalled at these areas, but it hasn't quite taken them out yet. So that could be a nice little target for this sell-off. Again, seeing the stock close within the bottom third of its quadrant, its sell-off bar is again pretty powerful. On that kind of volume, it's nothing to sneeze at. Doesn't mean that we can't get just another couple days down and have it bounce, but it's weak for a reason. And so I try not to smack in the face of that. I will, however, look for, again, relative strength within the context of this down move, and also relative weakness, which is a little bit difficult to find now because the markets have taken a bath. And I'll stay in the short trades I'm in as long as possible, stay in the long trades I'm in as long as possible, and let it be that hedging mechanism that I've talked about before. So I hope this helps, just a quick little analysis of that, and hope you guys have a good day tomorrow as well, and a good weekend. So take care. I'll talk to you soon.